Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Sonia and Prashant, and we have a screen which is a bit red today. I don't think that's allowed because the market's been just gaining ground. Of course, the key talking point was the Fed minutes, and while that's a bit hawkish, the market's been bullish. So let's see if the market sort of takes it in its stride. The US market, of course, was a bit down, but if you look at the bond yields, the dollar, the Brent, which is what our market sort of focuses on, they're pretty much benign. In fact, the bond yields pulled off even further. So let's see how the markets move. Back home, of course, the FI buying keeps picking up. In fact, now we are averaging $250 million a day of buying. So no longer a flash in the pan. And the Nifty is within 3.5% of lifetime high. The SGX Nifty, of course, indicating that we'll start a bit soft and then take it from there. Morning, guys.
Hi, good morning, Anuj. Good morning.
I think that was well put, not allowed. It captures the sentiment.
With the kind of, I mean, you know, out of three of us, two of us are in green. Yeah, mine is brighter. Anuj is like, well.
I mean, if you push it, you can kind of push this into the green zone.
You can push yours into the green zone as well. I mean, that's been the kind of sentiment, right, in the market. It's so gung-ho. We're all set to hit lifetime highs. The train is well on track. It's just about the speed now. 3.5%, as Anuj mentioned, away from all-time highs. 6% away from all-time highs for the Bank Nifty, 3-4% away from all-time highs for the mid-cap index. So it is looking pretty good. FIs continue to buy in this market. The Dow was under a bit of pressure overnight. So maybe we'll have to wait a bit till those all-time highs are reached. It's about, it snapped its 5-day winning streak. And I think it's also because of what came through from the Fed statements where they stay pat on curbing inflation. And they've spoken about some caution on growth. In fact, talking about inflation, the UK data is looking quite troubling as well. It's a 40-year high of 10.1% in terms of UK inflation. Food and energy prices continue to surge. And a couple of these companies were telling us, you know, the guys like Bazaar, etc., that have an exposure to Europe, that things are escalating there in terms of costs, energy costs, and that's hitting businesses in Europe quite hard. So that seems to be the overarching macro theme. But coming back home, Anuj, it's just a matter of time, right, before we hit new highs. But do you reckon that purely for today, maybe some pause could be par for the course because of the kind of run-up that we've already seen?
Well, Sonia, my physics teacher used to tell me that, he gives more importance to students who excel in practical than theory. Because, at the end of the day, theory, everyone can sort of recite, but practical is something where, you have to apply. So, I talked to a lot of traders.
But you were the backbencher, right?
So I was. So I used to do poorly in both theory and practical. So anyway.
Do you remember what your physics teacher said so many years ago?
I got 42 or 43 in physics, so, barely passing marks. But the teacher was good, so that's the point I was trying to make, right? And I had a respect for him, even though I didn't do well in physics. Yeah. So the point I'm trying to make is that, if you go by what, some of the smart traders are doing, and this is a market in which the price action, the screen is screaming. This is something else in terms of what the market is doing. Now, today's weekly options expiry. So, weekly options expiry, of course, has its own sort of takeaways. But because the momentum is with bulls, if you look at the options data, and I'm focusing today only on the options data, there's huge build-up at 17,900 and 17,800 puts. And if you adjust for that in terms of the premium, going by the options data, the first base for Nifty is at 17,860. Now, I'm not saying we go there. What I'm saying is that if you get something closer to 17,860, the risk-reward becomes favorable because the dips are getting bought. And this is a buy-on-dips market. If, however, that mark breaches, which is unlikely, then 17,780 going by the 17,800 put option data. So that's the zone, 17,780 to 17,860. Again, I'm not saying that we go there, but if we go there, that's where the risk reward is extremely favorable. On upside, the calls data is indicating that there could be some resistance at 18,000. So if the dip gets bought, then somewhere around 18,000, the algo traders would come in and book profit, and that's where 18,000 would become a bit of a resistance. 18,000 normally, these kind of markers normally are taken out with gaps. Because we are not having a gap up today, so intraday rally could top out somewhere around that 18,000 mark. But it's a matter of when and not if the Nifty conquers 18,000 decisively and closes above that. Going by what the market's been showing, it's a bit of a macro reset again. Brent down, commodities overall cooling off, earnings picking up, and the FI money is back. The Bank Nifty, I think, could be the one to watch out for because it's been consolidating for 2 days. Maybe it sort of outperforms today. But Prashant, what do you have for us?
I mean, the title, I thought, what should I say? I said, even fast trains are allowed to take short halts along the way, right? And this is like a Rajdhani or, the fastest train, Shatabdi, even faster if there is one, the bullet train, which is yet to hit the tracks. But absolutely incredible momentum is what we had. And I was making this point yesterday at 2:30, 3 o'clock. For an index at 18,000 with tens of thousands of crores in turnover, I mean, the market doesn't move 20, 25 points. I mean, so that's the point which, Anuj, I think you said, not allowed, right? I mean, just any and every small dip is being bought, however shallow, and of course, I mean, there's no question so far of any short dips. If you exclude that 1 week in between, we've been up for almost 8 straight weeks now. I think this is the 8th straight week. Just a quick couple of points. All of this, of course, also means that readings which tell you whether the market is overbought or oversold, in this case overbought, is very, very stretched. So the Nifty Relative Strength Index, daily RSI, is now at 83. It's at a 10-month high. It's the highest since October of last year when the Nifty hit 18,604, which was the all-time high. Nifty Bank RSI, daily RSI, is also at a multi-month high at 82. I mean, so, these are signals that you need to watch. The point is, don't be complacent because the momentum is strong. Let prices tell you otherwise, but, these things can happen very, very fast, very, very quickly. So don't be complacent out there. That's the point. Overnight, the FOMC minutes showed that the last decision for 75 basis point hike was made despite softer economic indicators. So, and this is an important point. So the minutes basically indicated that the committee members acknowledged that economic data shows that things are slowing down, but they still went ahead and increased by 75 basis points. So the implication is that as data, and we have enough data, the Empire State Manufacturing Survey, for example, the latest one, shows that things are slowing in the US. Don't assume automatically that there is, rate hikes, etc., are done. The minutes highlighted that inflation is still enemy number one for the Fed. By the way, the swap market in the US is still indicating markets are still pricing about a 60-65 basis point hike, so closer to 75 than to 50. The 2-year yield is something you need to watch carefully. It closed above a very important level of about 3.27 yesterday. We can talk more about this later. And what this means is that projections indicate it can go up all the way to about 3.75 or so. It's just a purely technical break that I'm referring to. And this is, of course, the most sensitive to what the Fed funds rate actually does. Historical analysis shows that the 2-year eventually gets to a level where what you would describe as a terminal rate, the peak rate, or maybe it overshoots a little bit. So, and we've got this break yesterday higher, so watch out for that. As yields move up, the one space which does come under a bit of pressure is IT services. It should not, because it's not. These are very profitable companies here in India, but as we've seen for the past 11, 12 months now, NASDAQ and tech stocks in the US get pressured, and we see some pressure here in India as well. So that's something that I'd like to highlight this morning. Sonia.
Okay, so there's perhaps a bit of a halt that the train is taking, but it's on the right track. Right?
Oh, absolutely on the right track.
It's moving fast, and I guess it's just a matter of time. We hit that 60,000 level on the Sensex yesterday. Just a matter of time before all-time highs are reached on the market. By the way, $3.5 billion is what FIs have bought since the month of July. That's some money coming in thick and fast into our own markets. But let's tell you what you can see in the next 2.5 hours. Lots of opinion coming through. First up, we have Lawrence Belanco of CLSA, who says, from a tactical perspective, the Nifty's rally off the June lows has triggered an exhaustion signal, suggesting the advance is mature and vulnerable to a reversal. He says similar exhaustion sell signals occurred at or just before the October 2021, Jan 2022 and March 2022 highs. This, he says, coupled with a daily momentum reading of 83 from the 14-day RSI, makes the Nifty vulnerable to a correction.
Okay, yeah, that's the point that Prashant also made. Vikash Kumar Jain of CLSA now, he says that the 15% year-on-year growth in Q1 FY23 pre-exceptional profit before tax for CLSA coverage was in line with their estimates. However, he adds that profit before tax for ex-PSU oil and financials, domestic names, grew 3 percentage points less than their estimates. He says more stocks saw earnings downgrades by their analysts as compared to upgrades, and their FY23-24 EPS as a result were cut by 3% and 1% versus a cut of 2% for consensus, which puts their Nifty EPS 4% below consensus. Cases Reliance, Financials, Larsen & Toubro, Bharti and auto names have the most outsized contribution to the Nifty's 2-year profit growth when seen in the context of their index weight. Okay,
let's also get you some money market views for today. We have a comment coming in from Parul Mittal Sinha of Standard Chartered, who says that the dollar INR has been trading in a narrow range as the impact of the dollar strength, higher importer demand has been offset by lower oil prices and sustained FPI inflows. She expects the dollar INR to trade in a range of 79.20 to 79.80. She says oil and dollar index remain the main driving factors in the short term.
Okay, on the bonds, Parul Mittal Sinha says Indian bond yields are now down 15 to 20 basis points from the recent highs, driven by lower oil prices and renewed hopes of index inclusion. She says the bond market has also drawn comfort from a stable rupee and strong demand witnessed in recent auctions. She expects the 10-year benchmark bond yield to trade in a range of between 7.15 and 7.3% next week. She adds the focus would stay on oil prices and global rates, even as India MPC minutes may have some impact.
Okay, well, we have lots of stock-specific action to track today. In just a bit, we'll get to that in our special Top 10 segment. But these are the stocks we're looking at today. Reliance, Bharti Airtel, Max Healthcare, Natco Pharma, ONGC, Craftsman Automation are on our radar. That's on the green side. And on the back of negative news flow, there's Wipro, Vodafone Idea and Sona BLW. They're likely to open in the red. If you want to know why, we'll tell you in just a bit.
All right, and now the big cue, of course, was the US FOMC minutes. This is, of course, from the July policy, which signaled that the central bank in the US is likely to continue with its restrictive stance unless inflation is reined in. CNBC's Steve Leisman filed this report earlier. Let's listen.
The Federal Reserve, after hiking 75 basis points in the July meeting, decided that they would anticipated further rate hikes ahead. They said they needed to move to a restrictive policy. They said it was required for them to meet their policy goals of low unemployment and stable inflation. The pace of future rate hikes, however, was data dependent, and it was a little tricky to read these minutes and get a read on a 50 or 75 from the September minutes, and I'll explain why here in a second. They said it would likely be appropriate to slow the pace of tightening at some point. No indication when that would actually happen. But after the 75 basis point hike, the funds rate was seen by several participants in the range of the long run range of its neutral rate. But some participants thought because inflation remains high, it was still below the shorter run neutral rate, meaning the Fed had more work to do in that regard. Some expected the Fed to hike and maintain the level for some time. We haven't seen that language before, although several Fed officials did sort of talk about that idea, that it was likely the Fed would reach a certain level and stay at that level rather than cutting, which is what the market has priced in now. There was also quite a bit of concern about tightening too much. In fact, many were concerned about that, so that's important. But overall, there were a lot of hawkish talk about inflation. Inflation was seen as unacceptably high and broad-based. And this is interesting. The decline in commodity prices was not seen as enough for the Fed to be comfortable that inflation was coming down. They said it was broad-based, and they said commodity prices can go up, they can go down. They want to see broader-based declines in inflation to be comfortable with that. There was little evidence, they said, of inflation pressures that were subsiding. And they said inflation could stay comfortably high for some time. And just a real quick thing on the economic outlook. They did say the second quarter saw a noticeable slowing, but they did see growth in the second half of this year.
Okay, and the market, I mean, initially what apparently happened is that wires carried, parts from the Fed minutes, which seemed to suggest that the FOMC was very worried about over-tightening. So the markets actually rallied. But they'd also warned against being complacent, which came later.
Oh, gosh. What a roller coaster ride.
I mean, the market remains very sensitive. That shows to what the Fed will do, perhaps. Market rally, of course, has been pretty strong. Mark Matthews of Bank Julius Baer is joining us right now to take us through what he's making of things now. Mark, great to have you with us here. Thank you very much. I don't know if we read out a little bit from what Lawrence Belanco of CLSA, of course, he's a technician, technical analyst. He's, of course, cautioning. He says that, well, things are maybe a little too stretched here. How would you kind of address that question, here and now question, as far as markets after all these gains go?
Well, I think technical analysis is very important. We as a bank pay a lot of attention to it. We have an entire research team dedicated to it. And to me, the most important thing that's happened over the last couple of months is the breadth of the market has staged a turnaround, which has really only happened, as far as we can tell, I think 6 times in the last 30 plus years. So there are different ways you can study breadth, but to cite just one, the ratio of S&P 500 stocks trading above their 200-day moving average was less than 10% back in June, and it's over 90% today. So that's an amazing turnaround. And if you look at the previous times that happened, as I said, there were, I think, 6, as memory serves me right. If it wasn't 6, it was 8. Anyway, it's less than 10. The S&P was up all of those times over the next 3 months, over the next 6 months, over the next 12 months. So I agree with Lawrence Bianco that, Blanco, that the technicals are looking strong.
Well, okay, the technicals are looking strong. But Mark, you know, the fear is, and I guess that's the fear in every big bull market, right? That how much is too much? And the run-up has been pretty sharp. I mean, for the Indian markets, it's been a gain of 12% in just 1 month. Do you think a pause is on the cards? Or should one just ride this rally, even if you've joined in late?
Well, you might know that the 200-day moving average is another important technical indicator for momentum. And pretty much all of the major indices are bumping up against it. High-yield bonds are approaching their 200-day moving average. The S&P and the NASDAQ are just a fraction below it. The Dow Jones and the Russell 2000, which is the small caps in the United States, have actually just broken through their 200-day moving averages. So this is a momentum indicator. It's showing you that, I mean, if the indices trade above their 200-day moving average, generally they have good positive momentum. I mean, given that only 2 of the major ones have broken above and still there's a bunch that are below, I think we just have to wait and see. In the short term, anything can happen. But I go back to what I said earlier about this, what technical analysts call breadth thrust, B-R-E-A-D-T-H, breadth thrust, which has been very strong over the summer, and historically has produced favorable results over the next 3 to 12 months.
Okay. Mark, hi, good morning. So now moving away from the technicals, fundamentally though, how are things looking? Because there's still a debate, at least in the US, that whether it still is a bear market rally or start of a fresh bull run. Your thoughts on what kind of market we are in?
Well, this is the funny thing about markets is that, frankly, we should not be having a breadth thrust. Things look pretty bad. We still have very high inflation. In America, you have very strong wage growth, which should lead to greater inflation, and you've got unionization of stores and warehouses of major companies like Amazon and Apple and Starbucks and Trader Joe's, which infers more wage price pressure. So it's the kind of thing that we'll know in retrospect why the market's breadth has improved so dramatically. Right now, we don't. My best guess is that actually we will be in a Goldilocks scenario. We are in a Goldilocks scenario. We just don't know it now. And what I mean by that is inflation will come down, but we won't go into a recession.
And we won't go into restrictive monetary policy as well, right? That's the third leg.
Yes, that's right. So I believe the Fed has hiked by 225 basis points so far since March. We're looking for about 300 to 350 basis points of hikes in this current cycle, which means they're more than halfway done. And between 300 and 350, I guess it's data dependent. I don't think we have a strong view on which one. But suffice it to say, we don't think even 350 basis points of rate hikes would be enough to cause a recession because the labor market is so strong.
Okay. But I guess what really stayed with us, at least stayed with me, in the conversation so far is you saying that we are in a Goldilocks scenario, and perhaps we'll only realize that a little later, right, when you look back and map the gains. So for an Indian investor, just coming back to the fact you said technicals are strong, we're in a Goldilocks scenario, and even the macros are positive across the world. If this bull rally continues, where do you see the preferences now, Mark, for an investor in India? Will it be towards the traditional banks, which have done exceptionally well? Will you look towards the IT space, which perhaps is not doing as well, maybe because of the impending recession in the US? Where would your preferences lie?
Very much in the banks, and I know that's a consensus view, but it just makes sense that with the NPAs having been written down to low levels and the formalization of the economy, we're really starting to see driving economic growth. And the startups, the digitalization of the economy, I think that banks will be the biggest beneficiaries of this because there is a capex cycle which will be very robust. I also might add reallocation of manufacturing away from China. And India, of course, has this huge domestic market to cater to. And foreign companies, in many instances, in many sectors, can now have 100% owning of the company that's operating in India. So I put it all together, and I think that loans growth will be strong, and that's good for banks.
Mark, what's your view on what's happening in China? Because there's some fresh concerns emanating from there in terms of what's happening to the Chinese economy. If the government is hiding a lot of information. Do you think that could have some bearings on how the market shape up from here?
Yeah, the economy is definitely weaker than the consensus had expected, and the policy loosening has not been as strong as the consensus had expected. And very simply, I think that for reasons that are unbeknownst to me, they have chosen to prioritize zero COVID over the economy. I don't really know why. But that's the way it is. And of course, a lot of people are hopeful that once the Communist Party Congress is out of the way in November, the restrictions will be lifted. But the senior positions, apart from the Secretary General and the presidency, those won't really be defined until around March of next year. So I wouldn't hold my breath. I think actually they are trying to create a system whereby there will just be constant testing of COVID. Like I think in most cities, everybody has to get a test every 72 hours to be able to go about their business. And I think they'll just keep doing that until they've got their own vaccines that work and they've rolled out and they've vaccinated enough people, by which time as well, the virus may have morphed into something even less dangerous than it is today. But it doesn't look good. I mean, it's very cheap. But there's so many other places in the world that are less complicated and more transparent. I don't see China taking airtime away from India anytime soon.
Okay, I guess that's the big question, right? Is India insulated from the global shocks, and will India continue its outperformance? On both those, what's your response?
Well, I remember 2008 making a terrible mistake because I believed that the Indian economy was protected from, the subprime mortgage crisis in America, which it was. As I recall, the Indian economy grew by over 5% in 2008, but the stock market went down over 50% because it's very linked to the rest of the world. And in a risk-off scenario, people will always have a home bias, and they will want to sell equities. So all I will say is I don't think we're looking at 2008. Meanwhile, to me, the dynamics in India are very favorable for the reasons I said before. So to me, actually, it looks like a very good market.
Okay, well, on that optimistic note, we'll let you go, Mark. Always a pleasure speaking with you. Thanks a lot for joining us on CNBC-TV18. That's Mark Matthews saying that this is a Goldilocks scenario that we are in right now. We just don't realize it. Of course, there are risks on the horizon, but technicals and fundamentals are very strong at the moment. Let's do one thing. Let's take a quick break. On the other side, our entire team will be with us to help us prep for the day and tell you about the list of top 10 stocks. Is now with us to help you prep for the day, and there are plenty of stocks to talk about. Anuj, let me begin with you. What are you looking at today?
Just to carry forward the point Prashant made about the bond yields and the IT stocks. Today, it's possible that IT stocks start soft. Even the Nasdaq was down quite a bit. But because today's expiry, what I want to see is if names like Infosys and TCS, which have sort of been in a decent rally of late, if this dip gets bought, I mean, if this dip gets bought in IT names, then I think that move to 18,000 is on today itself. So that is why, for starters, as I said, IT stocks will be weak. So I'll keep an eye on both Infosys and TCS. If they start to sort of turn into the green, I think that will be the market's message that perhaps the dip is getting bought. So that's why I keep an eye on both these large cap IT names.
All right, Anuj, thanks very much. That's IT stocks in focus may have a soft start, but keep an eye in terms of their behavior through the course of the day. Now, TRAI data, telecom data is out. Rima is here with what it tells us. Rima, hi, morning.
Hi, morning. So this is for the month of June. Reliance Jio has added the most subscribers for the third consecutive month. In the month of June, Reliance Jio has added 42 lakh subscribers, followed by Bharti Airtel, which has added 7.9 lakh subscribers, while Vodafone Idea has lost 18 lakh subscribers in the month of June. But remember, this is data for the month of June, which gets captured in the Q1 subscriber data. So in a way, the essence of this, minus a few numbers here and there, decimal points, it's largely known. In the Q1 numbers, we knew that Jio subscriber addition was very strong, which means June would have also been very strong. And for Bharti's, it was moderate. So while the data is positive for Reliance Jio and even for Bharti Airtel, and it's negative for Vodafone Idea, I don't suspect it's going to have a big impact from a stock market point of view because it gets captured in the Q1 data, which is out. Back to you.
Okay, thanks a lot for that. Well, the other stock that I'm watching today is Sona BLW, and I'm going with red over there. I'll tell you why. Now, Blackstone will be selling about 13.6% stake in Sona BLW via a block deal today. So now Blackstone is looking to raise about 3,200 crores via this particular block deal. And remember, Blackstone currently holds about 34.1% stake in Sona BLW as of June. And they're looking to offload about 13.6% stake. Now, the reason why I'm going with red is because the floor price for the block deal is 500 rupees a share, which is a 7% discount to the current market price, and it was already down about 5.5% today. So I will be looking forward to this block deal, but it is at a discount, so I'm going with red.
All right, we'll keep an eye out on Sona BLW with that block deal today. Wipro is in focus. Rima has more. Rima, back to you.
Well, this is what, money control sources have picked up, so I'm just reporting on that. Now, Wipro has held back June quarter's flexible payout to mid and senior employees. This was a letter that Money Control accessed, which was written to the employees earlier this week. And the letter says that senior managers to C-suite employees, that's the higher end employees, will not receive any variable payout for, in the month of June, while the associates will receive only 70% of their variable payout. So, this is not negative news, but bear in mind a couple of things. One, this comes on the back of 2 very good years in terms of wage hikes and increments for the IT sector. B, is this a Wipro-specific problem, or can we hear other IT companies? While Wipro's margin performance Q1 was stark, it was at a multi-quarter low, but even the rest of the IT pack reported some margin misses. So can we now expect IT companies to perhaps go slow on the wage hikes? But if they don't, then attrition will continue to remain a problem. For Wipro, the attrition is very high, and this development, if it doesn't become an industry-specific issue, could result in Wipro's attrition going up even higher. In the June quarter, Wipro's attrition was in excess of 23%. Back to you.
Okay, I mean, is Wipro responding to industry dynamics, or is this just a company-specific thing? That's the thing to note, and we'll check up on that with other companies as well. Rima, thanks for that. More stocks with news flow. Ekta is that list. Ekta, hi, morning.
Thanks for that. Well, all the stocks that I'm tracking today are all expected to be in the green, so that's positive. Max, for example, the weight up event is likely in Max Health across FTSE indices. This is after the large trade which took place. The upward revision in the investability weighting is expected to increase from 49.36 to 76.19%. And it should probably lead to inflows of $38 million. This adjustment is likely to take place tomorrow. NATCO gets tentative US FDA nod for a cancer drug, $49 million in terms of size. ONGC agreement with ExxonMobil for deep water exploration in Indian East and West Coast. Craftsman Automation commenced the commercial operations of its new additional plant in Pune, and Nava is in focus because Texas Retirement Fund has bought shares worth 27 crores.
Okay, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Reliance, there's Bharti Airtel, Max Healthcare, Natco Pharma, ONGC, Craftsman Automation and Nava. While stocks with negative news flow, there's Wipro, Vodafone Idea and Sona BLW Precision. But let's find out what's happening in the world of commodities. There was a sharp slide in crude, but now Brent is back above $93 a barrel. Manisha Gupta is joining in for a roundup of all the action from the commodity market. Manisha, hi, good morning.
Morning, Sonia. Well, yes, we have seen the crude prices come off its lows, and that really is because of the U.S. Inventories draw at a huge 7.1 million barrels. Last week was a buildup of 5.5 million barrels. So this is quite a U-turn that we've seen in the U.S. inventories. But that's a supportive factor because the markets do believe that the refining and the demand for crude seems to be coming back. And that can be seen in the U.S. gasoline stocks, which have declined for a second straight week. The gasoline production also is averaging lower on a week-on-week basis. So clearly support coming in for crude from there. But that is where the good news ends. The fact that the crude prices are down by 6% in this week is because there is higher production increase that we have seen from Russia, from Saudi Arabia. The UK inflation at 10% is the highest since 1982. And then the Chinese refining is also on a lower level, lowest since March 2020, and that would continue to keep the prices in check. But as of now, we are still headed for a weekly decline. Intraday markets clearly trading in the positive.
All right, Manisha, thanks very much for that. So that's commodities in focus. We'll take a very quick break here. We are back and we'll connect with Gurmeet Chadha of Complete Circle Consultants for some fundamental stock analysis. So that conversation will come up next. And of course, we have the management of Maruti Suzuki joining us. Shashank Srivastava of the company joins us to discuss booking trends for its mid-sized SUV Grand Vitara and demand outlook ahead of the festive season. Stay tuned for that conversation as well. We are back in 2.
Officer at Complete Circle. Gurmeet, good morning. Thanks a lot for joining us. So many stocks surging. I wanted your views first on the Bajaj twins, Bajaj Finance and Finserv. Just no stopping these two after the numbers. And there's been, of course, FI buying as well. So that maybe has helped. What's your view now?
So, Anuj, always a high beta stock, both ways, right? So when the market's correct, always takes a larger a bit of pounding. Happened in COVID, if you remember, from 5,000 levels to 1,800 and then went up to almost 8,000. We're almost back at 7,500 now. So this is one stock, which has always been a portfolio stock for me. Been lucky in terms of holding it for very long periods. But I think at this price, probably the incremental returns could be more muted because when things pick up, as I said, its beta is almost like 1.3, 1.4 times in terms of when we calculate it. And at about 10, book value remains pricey. Same for the Finserv, especially after the news of both split and bonus. I think this is a stock to be bought when the news gets a little murky. Let's say if we get another round of correction due to more aggressive Fed than what the market anticipates. Maybe that's a better. I mean, there are better NBFCs. I think Chola, HDFC Limited. To me, if you want to look at, let's say, NBFCs are better choices right now at these valuations.
Okay, I wanted to ask you about Wipro and what your thought is on this. The possibility of this recession hitting the IT companies. Wipro has held back on their June quarter flexi pay of their staff as well. So there are some problems. Do you think it's specific to Wipro, or do you think that the entire IT sector could be a bit under pressure because of this?
So, my sense is I think the IT companies will get differentiated. Obviously, there is some slowdown. I have clients who worked as a CTO with some major IT companies. I think there is some slowdown. It's not as bad as what we thought when the markets were correcting. So I think this particular news, and Wipro's problem has been frequent leadership changes, a lot of news which is non-business, and that's why it's lacked consistency other than being a great wealth generator in the past. I think within IT one should look at more players where probably you think probably the worst happened last quarter. So let's say somebody like a Tech Mahindra, the EBITDA margin dropped like 360 basis points. Trades at 13-14 times FY at 24 EPS. The communication vertical is almost 45-50% of revenue. Even if you see last quarter, the retail and technology vertical did well. It was the PFSI and communication which was a dragger. But as 5G rolls out, globally, you should see that pick up. We are seeing traction from both the equipment providers, software vendors, system integrators. These are the clients they deal with. I track it closely in terms of the number of active clients they had. It's well above 1250 now. So it's pretty granular now. And similarly HCL. Then there's another sub-segment in IT which I quite like, which is this ERD. Tata Elxsi now obviously looks almost out of reach with the kind of run-up it's had. But there are some other names like KPIT and LTTS which look interesting, from a medium to long-term perspective.
Gurmeet, just to go back to that financials point, I was just remembering SBI card yesterday spiked in the last hour or so, and then later in the evening we had that RBI discussion paper basically requesting stakeholders to give their rationale for levying all kinds of charges across instruments, across various category of instruments. Now, RBI's paper does not have a specific stance this way or the other. For cards, the big problem has been the MDR issue. Any thoughts at all?
So, Prashant, I think we'll have to wait on this in terms of more clarity coming on the nature of these charges. But one thing, if you see, whenever economy picks up, and I've been an ex-banker, the share of this revolver credit and the loan mix, which is, the EMI built in the card, EMI picks up. And that leads to, expansion of your margins and income. And SBI also has a slightly different positioning vis-a-vis. There is a bit of a premium because it's the only listed play in terms of cards per se. Second, I think this UPI getting enabled on credit card, I think would be a big trigger for card companies in terms of sheer numbers and volumes. They've been adding cards incrementally in tier 3, tier 4 towns. In the worst of the COVID period, I think they stood the test of time, both in terms of credit costs and delinquencies. It has that old G, system in terms of their risk management, etc. So I quite like the idea. It's a portfolio stock for us. It did correct, sub 900 during the correction. So it remains constructive. We have a constructive view on SBI.
Okay, all right. We have this entire auto space that has done exceptionally well, Gurmeet. So I want you to just stay on for a bit because we have the management of Maruti joining us now. There has been a very strong response to the Maruti Suzuki new launch, Grand Vitara. The company, in fact, received 33,000 bookings in 30 days. Shashank Srivastava, the Senior Executive Director, Marketing and Sales at Maruti Suzuki, joins us now to talk about that. Shashank, good morning and thanks a lot for joining us. It's a great product, no two ways about it, but there's so much competition in this SUV space. So just wanted to understand about, what are the features that would perhaps differentiate the Grand Vitara from the current competitors, and when do you intend to announce the pricing of the same?
Well, as far as the pricing of Grand Vitara is concerned, we'll start the sales sometime in September. The production starts in the last week of August. So that's the time when we'll announce the prices. Regarding the competition in this segment, actually now every segment except the lower end, the smaller hatches, every segment is very, very competitive. And the importance of this mid SUV segment where the Grand Vitara is positioned is really important for Maruti Suzuki because that's a segment which is almost 18% of the market, and our presence there has not been there. So it would be great if we could get good volumes from this segment. It should help us in our market share objective as well. And as far as the total bookings are concerned, yesterday we crossed the 40,000 numbers.
Okay. Shashank, good morning. But given that it would come from Toyota's facility, how much capacity would be dedicated for Maruti for this model?
Yeah, so actually we will have to see what the actual response to the product is once we announce the prices as well. And then we will see how much production is required. But to my knowledge, we have enough capacity in the Toyota plant for the expected sales in this segment.
Okay. One of the concerns that investors have, and I'm sure you've gotten asked this question a lot, is that both players, Toyota and Maruti, are launching the same model, exact same model with different names, right? So how would you target it, or how would you differentiate it? I'm sure there'll be some sort of cannibalization. How are you going to avoid that?
Yeah, so there are two types of competition, as you said. One is the product versus the other manufacturers and other products like the Creta or the Seltos or the Harrier and so on. And that, I believe, is a very large segment. In fact, this segment is almost like 5.5 lakhs. So there is a lot of volumes to be taken in this segment. And therefore comes the second point regarding the cannibalization with similar product. Actually, car buying is not exactly only the product, but it's also a lot of other things, including your systems, your processes, the ease of transactions, the after-sales service, the maintenance, the customer focus, the customer loyalty, the brand image, and so on and so forth. So I believe all those factors can be a differentiator when it comes to even if there are similar products. By the way, if you look at the looks of take the look of the product, the Hyrider from Toyota and the Vitara, the Grand Vitara from Maruti Suzuki, they look different, because the front and the back is actually different, even though the panels may be similar.
Got that point. Now let's get back to the last point you made. Shashank, you said that you would look at the total demand and then see, but you believe that there will be enough capacity. Right now, we're going through such a sort of strong demand in the new launches. What if Toyota also sees, huge demand, and I mean, if combined, it's much more than the capacity. In that case, how would the sort of ratio pan out between Toyota and Maruti?
Yeah, so there are systems by which a fair distribution of the production will happen. And that is based largely on the plans which have been projected on a rolling basis. We are doing that, by the way, in the Baleno, which is the Toyota Glanza. We are supplying to Toyota the Glanza, and also the urban cruiser, which was the Maruti Suzuki Brezza. So there also we follow similar rules of division of production, should there be a capacity constraint.
Shashank, hi, good morning. Would you know what are bookings for Toyota like for the product they are selling?
Actually, no, because we do not have a system of sharing information on sales and marketing for reasons of competition laws. We are not allowed to share or discuss anything related with sales and commercial terms.
Right. Would pricing be, I mean, to your mind, would pricing be largely similar once you decide on pricing? Or could it be meaningfully different? Meaningful enough to make a difference to a customer?
Can't comment, because I really don't know what the Toyota pricing would be. In fact, we are still debating our own pricing. So it's difficult to comment when you neither know your own pricing nor the pricing of the Hyrider.
Okay, Prashant, you're asking that for some personal reasons?
No. I was
debating which car to buy.
No, because the pricing is very similar.
Yeah.
I mean, say you have a Toyota showroom and a Maruti showroom side by side, and a customer walks in, and you got the same. But of course, Shashank said that they look different from the. So maybe there is a differentiation, right? Yeah. And maybe you like one look more than the other. But how do you decide? I mean,
that confusion. That's why I was asking. I mean, there could be cannibalization as well, right? But any more new launches on the anvil in FY23?
Yes, so in fact, today we have the launch of the new Alto Sonia. I am in fact at the venue. We'll have the launch in a few hours' time. Also, we would see more launches. Maruti Suzuki will, especially in the SUV segment, you would see more launches coming up shortly. Just one more point, Sonia. I just saw it's something on the ticker saying that Vitara prices to be announced in August end. Actually, we'll be doing it in September.
Oh, you'll be doing it in September. All right, we'll make that connection. Finally, just overall demand, I wanted to understand, because there was a good double-digit growth that you saw in July. For August, how has it been so far, rural versus urban? And what kind of average run rate do you see in terms of sales?
Again, Sonia, great, because that's now coming to be the major point where all the OEMs are discussing. We came back from 2 consecutive quarters of 900,000 plus volumes. Q4 of last year, Q1 of this year. This is the first time ever in the Indian auto industry that this has happened. And on top of it, we had a July sale of 342,000, which is also great, because it's the highest ever wholesale in any month of any year in the auto industry. And August looks similar. Actually, the beginning has been pretty strong, and it is possible that it might actually be the highest ever month. Also, it's possible. It's very close to the July numbers we predict. So last year, it was about 260,000 was the sale in August. So you could see a growth of upward of 30% in August alone.
Okay, one last question, Shashank. Your competitor Mahindra launched Scorpio and they got 1 lakh bookings in 30 minutes. Surely, at some point, as a market leader, that must hurt you, right? You must be thinking we should also come out with something like this, which generates this kind of hysteria.
Not really. I mean, the booking system for different manufacturers is different. So our best wishes to Mahindra for that very great and the rapid bookings in 30 minutes. It was, of course, done on the internet. So our system is a little different. So actually very well done for Mahindra. My best wishes, our best wishes to them for the future.
Historically, is there do people drop out as well? Because the booking amount is refundable, right? I mean, not just for you,
yes,
but across the board. So
yes.
How many
yes.
stay? Is there a way to...
So it's different for different types of booking. Historically, actually about 32-33% of the bookings drop out historically. So it varies from month to month, but for different reasons, not just for a change of choice, but also for non-availability of finance or some such issues, people do drop out. Historically, that average is about 32-33%.
All right.
Sorry, I just had one question. Since you said that, Mahindra has used this route online where they have this whole new system where you can book your SUV online, you can look at the colors, etc. Why doesn't Maruti follow that same channel?
Actually, we can follow that.
Because it's working, right, for them, clearly.
Okay, but we never know who are those guys who are booking actually. So we follow the more conservative route. We do have a platform where you can book digitally, but ideally we would like the consumers to check the vehicles and look at the vehicle. And we also, the consumer, the dealer gets in touch with the consumer also. We find that the dropout rate there would be much lower, I suppose. But that is our opinion, and clearly Mahindras have taken a different route.
All right, Shashank, we'll leave it there today. Thanks a lot for joining us. Both of you, of course, have been great companies. Thanks for your time.
Thank you.
Gurmeet, you want to weigh in on Maruti? The stock's done well, of course, over the last 6 months.
Some of the I think positives could be in the price. It's almost run up to 9,000 levels. I think what is heartening is it's getting the product gaps filled now. So they had this UV gap. They lost almost 8% market share, down to 43% from 51. So I think they're likely to get back some share. If you see their annual report, they talk of 2 million units FY23, which essentially will translate to almost 49-50% market share. I think, but as I said, something could be priced. I still like M&M despite the run-up, still available, 15-16 times earnings. And there are multiple levers there. I think the tractor segment should pick up in second half of the year. They're gaining market share there. Also, some impact of commodity prices coming off will start reflecting in their margins as well. And I think the SUV portfolio really excites me. I think they've done phenomenally. In fact, I was looking at the EV launches also. Obviously, that will probably started getting reflected in FY 24-25 onwards, but looks very impressive, and I think they're likely to again gain market share. And SUVs is the fastest growing segment, so that will add both to numbers as well as the margins going forward.
I mean, just about 3-4% of Indians own a car, The big growth should come from entry level, but there is pressure on entry level, as the Maruti management has also told us many times in the past. You know, guys, I was talking to someone yesterday, and this is pure coincidence. I just remembered. This person said he booked a Mahindra car. I remember which one, last year. And he waited for about 4 months, no sign of delivery. So he said, I cancelled my booking and I bought the share at 850. And he said, you know,
Best
1200,
decision ever.
1300. So it's like, you know, so yeah.
Now you can buy a Mercedes instead.
Well, I will make the suggestion.
Depends on the quantity.
Depends on how much he's bought, right? Considering the gain in the price. All right. Well, Gurmeet, thanks a lot. We'll just come back to you in a bit. We have the pre-opening rates kicking in. Let's take a quick break. Mitesh Thakkar and Sudarshan Sukhani will be
back. Well, we are in for a bit of a soft start, but the market's been in such a strong sort of momentum that any dip gets bought, and perhaps this one as well. The first dip normally in uptrend gets bought. We have Sudarshan Sukhani and Mitesh Thakkar now joining us. Gentlemen, good morning. Sudarshan, the Nifty is almost at 18,000. What next?
Good morning, Anuj. Well, I assume the next step would be to cross 18,000, but that may not happen today, at least not on a sustained basis. For today, I expect markets to be a little choppy. That happens because we have had back-to-back gains and the US markets have been soft, so have been Asian markets. So Indian markets are likely to react to that. So there is some support now coming. As you know, we are trailing our stops up. Now we have the trailing stop at 17,840. So a dip towards 17,840 would be a buying opportunity for intraday traders. Then you can see what you can get out of it. Keep a tight 50-point stop if it reaches there. But beyond that, I think there is no trade today because markets could be choppy. And that applies to the Nifty Bank also.
Okay, Nifty and Nifty Bank both could be choppy today. Mitesh, good morning. Are you going to buy or sell Nifty, Bank Nifty, your strategy?
Yeah. We've not been trading the index for the last couple of days. Good morning. So, you know, I've been not been comfortable with the fact that one, we have extremely overbought tradings, and two, I think the stop loss are way far off. So the idea is to buy on dips. And as you were highlighting, Anuj, all the dips are getting bought into immediately. So we have not been getting a meaningful dip to take an entry on the index. But I think, you know, once we get closer to about levels of 17,750, 17,800, I think that could be a very interesting level to initiate fresh long positions. And 17,750 is the key support area. So once you get closer to 17,800, which is about 120, 130 points away from here, then I think you can take a 50, 60 point kind of a stop and then start accumulating the index. I think we will eventually hit 18,025, 18,050 and go even higher. But in the short term, I think, you know, with the overbought readings, it's always a very tricky affair to enter when the stop losses are too wide. So for the time being, I'll avoid the indices. But yes, we have been trading with more of long buys on stocks as we've been, you know, talking about this for the last many days.
Okay, well, we have the stock-specific ideas expected, but we'll do one thing. We'll take a quick break, come back with the pre-opening rates.